Hey, what's going on, everybody? Welcome to another episode of the Path to Profit podcast. If you're joining me for the first time, as we do every single week, we're breaking down everything that went on in the overall market to get you ready to trade for next week. So, without further ado, it's time for the rapid review. All right, agenda is down in the description as well as timestamps if you want to jump around. But as always, wait till the very end where I give my 0 through 10 rating on this market so you know exactly where I think this market's going. All right, let's jump on into it. So we'll get started with the current state of the market. Market direction, we are still in a confirmed uptrend. Been that way for 18 days. And looking at distribution days, we have one distribution day on the S&P, 3 distribution days on the NASDAQ. So we actually started this week out with 3 distribution days on the NASDAQ. The only distribution day that was gained was on the S&P, and that was on Thursday. So resulting in that one distribution day. And if we look at our distribution day tracker, you can see all the days that we've acquired since this uptrend. And right now, in terms of what days could possibly fall off, I would say, unless we have a really big, strong week, probably not going to be losing any days. The only one that's pretty close would be the 12th right here. But we got to get 5% above the close of that distribution day. So it would have to be a pretty significant and powerful move. But you never know what can happen. In terms of time, though, we got some ways to go. So we'll be waiting on that. Looking at the moving averages. So the big change for the moving average this week, which isn't a significant one, but still something to note, is that the 10-day simple moving average was broke on both the NASDAQ and on the Dow. And we stopped just at it on the S&P. So basically the interaction with the 10-day was the real only significant change in moving averages. We're still above every other moving average on all indexes. All right, so for the week, we were down on all indexes. The S&P was down 0.10%, NASDAQ was down 0.42%, and the Dow was down 0.23%. So just slightly down for the week, which leaves us at 2023. The S&P is up 7.66%, NASDAQ is up 15.34%, and the Dow is up 2% even. So we're going to jump over to Thinkorswim. As we always do, we'll start off with the NASDAQ. Taking a look at the charts. To be honest, not much has significantly changed from last week, and just the same way we saw these recent slides that we were just looking at. We've been in this real tight sideways action. As you can see here, yet another week of just that kind of moving sideways. Now, I don't think that's a bad thing. It's actually good to see some tightness because it's going to give us a very, very good idea of which way this market goes when it does decide to break in a certain direction. But yeah, it's really just been this sideways action. And you can even see the S&P looking very, very similar with that sideways action. I think the only concern is we are seeing still resistance at that level, but I don't think it's a significant rejection as much as it is just a tightness right around the area. I know some people are looking at that and saying, well, it looks like we're kind of getting rejected as we start to try to break out there. I don't think that's the case. If it was a rejection, I think we'd be dropping a little steeper. I really think it's just this kind of bouncing Darvish box type area of tightness right around that key level that we want to get over, which again is dating back to last year, June 2nd. We'll take a quick look at the weekly just so you can see the weekly. We can see we had this big downtrend. We've attempted to rally. We pulled back. We're attempting to rally again. And now we've kind of tightened up around that key level. And then also looking the same on the S&P when you look at the weekly. Very, very, very similar. But in terms of key levels, especially looking at the NASDAQ, look, it's very, very clear that this 12,316.90 is the level we need to get above. That's the level that if this market is going to probably give us a good run and give us an opportunity to make some money, it's going to be breaking through this level. Now, on the downside, there's a lot of different areas to look at. I think the simplest and easiest thing to look at is honestly the 50-day simple moving average. I think we can pull back and bounce around there, and that's kind of all healthy action. But if we break below that, that's where things start to get a little more concerning. And then the real area, which I think at that point would be extremely obvious, would be the 200 and then the rally day low. But 50-day really being what we want to look at. And again, I think it's very much the same when we're looking at things on the S&P. So if you have any questions, comments, concerns, throw them down in the comments section, and I'll be happy to answer all those, as well as in our Discord channel. Discord in the description if you want to join that. Got a lot of great people in there talking about the market. So it's kind of a niche area of similar like-minded traders talking about the market. But let's jump over now to the industry groups. All right, so with the industry groups, we look at the top 10, bottom 10 weekly performers, biggest jumps and falls in the rankings, and the top 20 industry groups. And as always in the top 10, be identifying any of the leading stocks and stocks breaking out. All right, so top 10 weekly performers. Anything that I think notable on here? Energy and solar, definitely been seeing some better looking base patterns. I think we all understand that that's an industry to be paying attention to, just in terms of trends and things that are going on in the world. But nothing significant other than that, or that jumps out at me in particular. Now, bottom 10 weekly performers, looking at that. Yeah, nothing really that I derive from this slide that seems extremely important. But we'll keep a look at this every single week, and we start to see consistent trends of a group being in the top 10 that could identify them possibly falling through the rankings. And speaking of rankings, we got the biggest weekly rank jumps. There we go, energy and solar again. I think that's a group definitely to pay attention to. There's a lot of stocks that I think are looking like they're starting to maybe break out of some bases, so pay attention there. But other than that, nothing else to add. And biggest weekly rank falls. Big thing I'm noticing here, it really only highlights itself slightly, is some of the electronic semiconductor type groups start to show a lack of relative strength. And we'll see that as we start to go deeper into the top 10 and top 20 groups. But other than that, nothing else to add here. So we'll look at the top 20. You can see, and this is the first instance of that we're seeing, is the electronic semiconductors equipment dropping from 8 to 19. Seeing one of these groups make that big drop, definitely not a good sign for the group. Other than that, some of the other kind of NASDAQ and computer companies making drops. But the thing that I've noticed with a lot of these is that nothing has really significantly, in terms of the tech, held itself, improved itself as like this is the group and showed significant and continuing leadership. And I think that has to do with that kind of sideways action that we're seeing. We got to keep an eye on this stuff. Eventually, it's going to be clear for those who have traded before. It does become very clear what the leading groups are. As for right now, we're just going to have to wait and see. All right, so let's get into the top 10 industry groups. We'll be identifying the Campos composite stocks, which are meeting the criteria you see on the screen, and I'll highlight any actionable stocks. So let's jump over to MarketSmith. And let's get started with number 10. So number 10, we have medical hospitals. Big jump from this one. This was number 35 last week, making this all the way up into 10. And identified the RS trend as breaking out. You can see the RS line. If this was a stock, you'd be getting that blue dot signal as we're breaking out. And we're also getting new highs and that kind of vertical jump up as this moved. Not a significantly big group. So this is just still something that I think, a group that's definitely performing well, a group that's breaking out, and something to pay attention to. And in terms of stocks, just that the big one, the big name, this HCAA that you see right here, only one to mention there. All right, now we have number 9. This is medical products. This one jumping from 12 to number 9. So just out of the top 10 into the top 10. This is a much bigger group. There's a lot more names I think a lot of people are going to remember from here, from like your Dexcom, your Insulet, and Repligen. There's just a plethora of names in here that you've probably seen before and have come up on your watch list. So jumping into the top 10. And I think another one of those where you're seeing this base pattern forming within the industry group where it looks like it's about to break out. Oh, and before I jump too far ahead, stocks. So much more stocks in this group. You can see I highlighted some of those that are like in patterns or right at the pivot point or are breaking out. Definitely worth taking a screenshot of this, going through some of these stocks, seeing if anything fits your criteria and something that you might want to purchase. So definitely screenshot this screen. All right, now we'll jump over to number 8. This was 5 last week. Leisure, travel, and booking, a group that we've talked about every single week. This is your Airbnb group, booking.com. Those travel kind of websites is what you're seeing a lot in here. And yeah, just continuing in terms of price to just chop up and down. The RS line, though, definitely in a flat pattern, but this has still been in the top 10 for a while, so something to pay attention to. And only stock in there, booking.com. All right, let's jump over to number 7. This was 15, another one jumping into the top 20. This is, as a lot of people love, the Crocs group. You got Crocs, you got Deckers, you got On Holding, which has been a really, really talked about stock this year. Shoe company, which I personally don't run in, but talked about a lot and definitely getting some traction. Nike, Skechers, all those brands falling into this group. And this stock just, kind of continue higher as it broke out. That was last week. So 15 up to number 7. Looking healthy. And in terms of the stocks in this group, there you have those names. And Crocs. Crocs is definitely a one that's in a pattern. I would definitely put it on your watch list. Keep an eye on it. Doesn't necessarily mean you have to purchase it, but I think it's a very good CANSLIM stock for sure. All right, number 6, metal production distributors. This one was 2, dropped all the way down to 6. RS line definitely starting to tank. Small group, though, not worth really paying attention to. And no stocks to mention. So we'll go on to number 5. And this was 9 last week. This is another group that if you're a CANSLIM trader, you definitely have a ton of these stocks. You probably own some of these stocks, as I did. Like ELF, which went on, or ELF Beauty, which went on an insane run. Still going on a run. I think it's up about 70% right now. Stock that I took profits on a little earlier, given what was going on in the market. But you can't catch them all, right? So, but yeah, this group definitely breaking out of a pattern. Highly suggest going through some of these stocks. And here are some of the names. Now, a lot of these are extended, like ELF, but it's definitely worth going through and keep an eye because most of these stocks will probably pull back at some point and give you an extra opportunity to get in. If it is a stock I think could be a true market leader for this year, you're going to want to do that. All right, number 4. This is 1 last week, now number 4, and this is what we're talking about. Semiconductors kind of falling out of favor. The RS line trending down. You can see not necessarily that it's getting annihilated. It's really more in a sideways pattern. But in terms of relative strength, it's starting to dip. And it's really honestly acting very much like the market is, which is not surprising as a lot of stocks tend to do that. In terms of stocks in the group, you can see those there. But a lot of them are in patterns. And this could be giving some opportunity that if this market does turn around and this group can pick up its relative strength, that there could be some buying opportunities in here for sure. So keep an eye on those. All right, big jump up, 10-3, building, residential, and commercial. Yeah, you can see this has just been on a complete tear, trending upwards for sure. Green on everything, and definitely deserves to be up in that top 3 spot for sure. Group we've been talking about over the past couple of weeks for sure. So there you have a lot of stocks, a good amount of them in bases or breaking out. So another screen worth screenshotting if you're building a watch list for sure. All right, number 2, this was 4 last week, jumping up to number 2. This is the Spotify and Duolingo group, 2 stocks that get constantly talked about for kind of changing the way we work, live, and play. This pattern, though, you can see it's kind of sideways. RS, though, 99. RS line kind of flat. But, yeah, I would definitely take a look at Spotify and Duolingo. I think even if they're not buying opportunities now, the company's worth paying attention to. And Duolingo, only company in there, but extended. All right, number 1, number uno. This was 3 last week. Jumped into number 1, mining gold, silver, and gems. A lot of people have been talking about this kind of metals industry, specifically gold has been talked about a lot. And you can see that in a lot of the gold stocks that have started to perform fairly well at some point. But it did start turning kind of back down. The RS line's going down, but it's had relative strength for a while. So I think that's why it's making its way into the top 10. Needless to say, one rough week isn't worth disregarding a group at all, and a good amount of stocks to be paying attention to, but a lot of them are extended. So be aware of that. But yeah, that's what we got in terms of industry groups. I think the big thing is just we got to keep an eye on this between the way the market's tightening, between how the industry groups are shifting a little bit. You can see that we are starting to see some groups show up consistently. So you got to be on top of all this. If this market is going to break, it'll be pretty clear as to what industry groups and stocks you want to be in, but only if you're doing the work. So, all right, now we got earnings. And this could be the catalyst that we are looking for. Earnings tend to move stocks in a direction, whether up or down, based on earnings reports. And looking at this right now, we starting to have, these are just stocks that are like 80 to 90% composite, 80 to 90 composite rating or higher. But a lot of banks are reporting this week. There's a lot of information that's going to be coming out, a lot of catalysts going into the market. So that could be what shows us whether we're going to be breaking through that resistance point on the indexes or getting rejected and moving down. And it's definitely going to be an interesting week. I'd definitely be paying attention to the market, seeing what's going on. And this could be the catalyst, pretty much it. All right, so now stance on the market. 0 through 10 rating on the market. As you can see, there's my scale on the screen, so you can kind of understand where my score is coming from. Last week, we're sitting at a 6.3. And I'm not even going to change it this week. 6.3. I don't think it's worth changing. Nothing significant happened this week, up or down. And like I just said, I think this is going to be a week to really pay attention, see how a lot of the stocks tend to react to their earnings reports. As earnings season really starts to kind of occur, we're going to see stocks make significant moves in some direction. So too early to change the score and say it's going in either direction. I think 6.3 is okay because, look, there are some stocks that kind of have done fairly well, like an ELF, and there is definitely been a few stocks to make money in. So I don't think it's a market to say you shouldn't be buying stocks, but I think it's a market that you should be very, very, very picky in what you're buying, be extremely risk aware, and be willing to cut your losses very, very fast. Because as much as I've seen some of these few stocks break out, we've seen a lot of stocks that just stalled right at the buy points, or some that have got rejected and dropped down and kind of hit stops. So really pay attention there. But there's definitely a lot of basis forming. I think if you're doing your weekend routine, if you're going through these watch lists, you're building your own watch list, you're going to see there's a lot of stocks that look like they're setting up. Very similar to how the market is, just kind of setting up at that pivot point. Now, again, the question comes, are we going to break out and are these going to go on a run? But you have to be prepared. You don't want to be caught flat-footed at all. So I think the word that's been for the past couple of weeks, unfortunately, is patience. I know it can be very difficult to have patience, especially when you're looking to make some money in the market, but you can't push the envelope. Definitely want to have some patience, wait and see how things pan out, and don't dive in too quick. But other than that, that's really all we got for this week. Appreciate you joining. Subscribe, turn notifications, because if you made it this far and you're not subscribed, why aren't you? Two different kind of things up there. If you do like these videos, you can check those playlists out. Might be some stuff that you'll enjoy there. But other than that, that's all we got. Stay disciplined.